Okay, buy the bear. Who among us was out there buying the bear? We brought in two guys who, between them, handled $315 billion in assets under management. Joe Duran. Joe Duran is with United Capital, and Chris Sunderland is over at Eaton. Vance. Hi, gentlemen. We're spanning the coasts here because it's very easy to get very introspective on Wall Street. So we decided let's go to Joe in Irvine, we'll go to Chris in Boston, and figure out what you guys have been doing. Chris, to you first. What were you doing today? Were you buying the bear market?
We actually have taken advantage of this correction. I can't get overly specific, but there were opportunities that we saw throughout the day to add to certain names and certain sectors that we are bullish on long term. We like high quality, dividend paying stocks with strong cash flows, strong earnings, competitive advantages. So, you know, there are areas in consumer staples and consumer discretionary and in telecom and healthcare where we have long-term holdings that we may not have necessarily been adding to today as I speak, but these are names that we like long-term, and we'll take advantage of these opportunities to add to names like Medtronic and Verizon, to name a few, Home Depot to name another one. I think longer term, talking to some of our portfolio managers, there could be opportunities in some of the areas that have really been hammered, like energy and materials. I don't think that day is today, but those opportunities seem to be approaching.
We're down 416 points, folks, and we have about 5 minutes to close. And as soon as those bells ring, there are going to be a lot of people wiping their brows. Joe Duran, are you wiping your brow from buying this bear? What were you buying today?
You know, we don't really spend a lot of time worrying about what happens over the course of a day. We really spend our time worrying about, are our clients going to be affected by this decline? And the answer is no. The reality is we've been incredibly spoiled. We typically have a 15% decline every 2 years or so. It's been 4 years, so it's been 400 trading days, 900 trading days without a 15% decline, and it's normal. Today, in particular, is really the concern about the bursting of the Chinese bubble, and I mean the stock market, not the economy. And then secondly, computers and what they're doing and the impact that they have on the noise intraday. So we tell all our clients, don't try to buy on days like today because you have no idea where your print is going to end up. There was very few people who got executed the morning, and there are very few who got traded as it sold off. So you just have very strange patterns. I've also never seen anything like today. I mean, it's kind of like the flash crash we had in May a couple years ago, where you just see that humans are not buffering the noise in the course of a day.
I am so glad you just said that, Joe, because I think that I didn't know that very few people were able to get their trades executed, except that we did hear anecdotal evidence that the basic brokerage firms, the online brokerages like TD Ameritrade and Scottrade, experienced massive volume. So, Chris, does it make sense that as you press the buy button on Facebook, like Jeff Green did, and he still didn't catch the bottom? It's very hard to catch the bottom, isn't it?
It's impossible to time markets. I think one of the best things that happened throughout all this is some of the news that we've been seeing out of China, because finally it presented us with this correction that we've been waiting for. Corrections are healthy. They present opportunities for us to add to those long-term names that I mentioned earlier that really have those competitive advantages and are high quality. So it's not the first time we've been through this. We've had 8 or 9 corrections since the bull market began. I can think of 2. I remember second quarter of August 2010 when we had the BP oil spill and we had a massive correction in energy and
Yes.
materials names in the market. And then more recently, in August of 2011, almost about the same time, 4 years ago, we had the S&P downgrade of U.S. debt, and it presented a tremendous opportunity to add to those kinds of positions. And we saw big rallies following those in Q4 of 2011, for instance. So I think the word of the day is patience.
Patience. We want to thank Chris in Boston. We want to thank Joe in Irvine. So we span the coasts here on buying this bear. Thank you, gentlemen, so much.